hope you're doing well today. This is the Flash Briefing. My name is Drew Creekmer. I'm a wealth advisor at Creekmer Wealth, and I'm joined today by Andy Anderson. He's our Director of Financial Planning and a wealth advisor in our Central Illinois office locations. And so, Andy, I'm going to apologize up front. I've been traveling all over the place. We are getting our first snow of the year here in Denver, so I have a cold. So I apologize if I cough. But how you doing today, man?
I'm doing good. And you know what? So it's snowing out in Denver. I will let you know that just last week, last Monday, we had our first, I don't know if you'd call it a snow in central Illinois, but there were some large snowflakes coming down for about 10 minutes. So I guess we're
Hey,
trying to catch up
it's
to you out there
exciting.
in the West. Yeah.
Oh yeah, we're getting to that time of year, getting to the holidays and the winter weather. So
I always
hopefully,
say it's always interesting. The temperature in spring and fall is usually pretty similar, but what's coming after is different. That's the difference. Now winter's coming rather than summer coming shortly after. So that's life
it's
in,
so
in
funny you say
Central
winter is coming. I picture like Jon Snow standing on the wall, just staring. Like that's what's coming down the road. So, well, good deal, man. Hey, let's hop into it. So today, Andy wrote a blog about investing in gold and silver, and he wrote the blog, and we're doing this video because it's a really timely topic. We start having clients ask us about investing in gold and silver anytime there is extreme concerns about the economy or extreme volatility in the stock market. And right now, we have both of those things, in addition to the fact that bonds, which traditionally have been a pretty solid store of value, a very low risk when markets are going down, bonds are down over 15% for the year so far. And so a lot of people are saying, hey, should I be putting money in gold and silver and precious metals as a better way to protect my capital? And so Andy wrote this blog. And Andy, I'm going to kind of hand it over to you and let you just high level the key points from that blog. You dive into some of the numbers and walk through just your findings that you wrote about.
Yeah, so as you mentioned, anytime we go through times of economic uncertainty, or we can even throw the word fear in there, people start to look to how can I protect myself? We don't like to see the value of our accounts dropping, so we're searching for things out there that can protect the account from further drops.
Right.
And historically, some of those resources, some of those areas we turn to have been gold and silver or precious metals in general. The thought being that these commodities, these precious metals, will increase in price if we see rising inflation, or they will hold their value if we see periods of extreme volatility or a market drop. And it's kind of interesting. I mean, when I first got into the industry, I heard the saying, an ounce of gold, 100 years ago could have bought you a pretty nice suit. Today, an ounce of gold could buy you a pretty nice suit. So,
Yeah.
it is kind of that running rule of thumb that gold, silver do hold their value over the course of time. But what we've seen over the last couple of years here is that they've started to behave very differently. And I'm sure you've seen that too, Drew. In the blog that I did, I looked at some different periods of time and says, well, how do these perform related to inflation in different
Right.
time periods? So I actually looked at what the rate of inflation has been in this country going back to January of 1979. And in that time period, its inflation has gone at about an annual rate of about 3.4%. The value of gold has risen slightly quicker over that same time period at 4.64%. The value of silver slightly slower, 2.69%. But both of them are kind of right in that area
Right.
of the rate of inflation back since 1979. But if we look more recently, specifically this year, when we've really started to see inflation pick up at 40-year highs, the Federal Reserve is starting to raise rates to try to combat that inflation. In this most recent environment, we've seen inflation increase about a 6% annual rate since the Federal Reserve started raising rates on March 17th of this year.
Right.
So inflation has increased at about a 6% annual rate in that time period, whereas gold and silver, which we would think would keep up with that, have actually fallen 15% for gold and 26% for silver in that same time period.
Wow.
So in our
And so we
minds, we
have high
think,
inflation, but we also have a war in Ukraine. We also have other
yeah,
geopolitical concerns, which usually are net positive for gold and silver. So, Andy, what does that mean? Has that changed the an ounce of gold will buy you a good suit? Is that no
mhm.
longer the case?
Yeah, well, so I think it is, but when we're looking for something to I guess, eliminate the volatility in the portfolio, because that's really what we're seeking, or what
Right.
clients are seeking, is how can I eliminate these large drops that I'm seeing in my account? Maybe if you're invested in the stock market, or even, as you mentioned, in the bond market right now, how can I eliminate that volatility? And the fact is, gold and silver are not doing that for us right now.
Mm.
And perhaps in the past, and perhaps over the long period of time, looking back over decades, yes, we can see that play out over that entire time period. But right now, in this current environment, they're just not doing that. As
Yeah.
we can see by that drop that they've seen this year, falling 15% and 26% respectively for gold and silver.
Yeah.
So historically, again, have they increased as fast as inflation over the years? Yes. When we look back over the entire time period, they have. Have they previously been a store of value in times of volatility in the market? Yes, they have. But recently, and what we're seeing right now, we're just seeing a different environment where that just hasn't been the case.
Yeah, and at the end of your blog, you talked about this is probably not the medium to get into why this has changed, why gold and silver have probably lost their place as that store of value. I thought that was a funny comment, also true though. It's a longer conversation. You have to go over decades of economic and political decisions to get where we are. But just high level, President Nixon decoupled us from the gold standard back during his presidency, and that in turn began a downward, let's just call it a cycle of gold and silver losing that place as a store of value in your accounts. And then let's come to 2020. Let's fast forward a couple of decades. In 2020, actually back in 2008, to get out of the Great Recession that we were in then, we started printing more money. We lowered interest rates. And that continued over the last decade plus and really accelerated in 2020. And so by gold no longer being affiliated with the US dollar, going back to the decoupling from the gold standard, and then us drastically increasing the supply of dollars in the system, that has just further wrecked the value that gold and other precious metals bring because they really have no monetary purpose anymore. And Andy, I thought you had a really good thought about the monetary purpose, or what is the purpose of these precious metals today?
Yeah. So if you think back to before that decoupling, if you have gold, that you can turn it in for a certain number of dollars. Well, now it's all based on whatever the market rate of gold is. That's how many dollars you can get for it, minus commissions or fees or anything related to turning gold into cash. But now it's essentially, what can you do with those metals that determines the value, So silver, it's got some uses in, semiconductors or chips or, different mechanical or technological uses as far as its value. And gold, it's got some of that, but more so gold is pretty much jewelry right now, So it's really a matter of no longer does it have that backing of the value of the US dollar on it. It's what can you do with it? And, as a store of value, we're seeing other things come into play. We hear people talk about Bitcoin or cryptocurrency as a store of value. Well, Bitcoin was up in the mid 60,000s. Now it's down. I don't know what it's recently under 20,000, but yeah. So the whole idea of a store of value is significantly shifting. And I think we're still trying to determine right now, what is that new store of value?
Right. And that's where having a good financial plan, a flexible financial plan, and a team of individuals who are always looking for other tools to help you protect your capital and help you achieve your goals is so important. In our team here at Creekmore Wealth, we've been working over the last couple of years to develop a tool chest of different products or investments that can do a good job generating a positive return, but also protecting your principal. So, Andy, can you high level a couple of those tools for us, and then let people know what they can do if they want to hear more information?
Yeah, so we have multiple tools. That's our job. We always want to try to find as many tools as possible for the different objectives that we have. And if we're looking simply for safety, protection, something to get a positive rate of return without a lot of market volatility, right now we have a few solutions for that. One, we've partnered with a group that networks with banks around the country and provides a deposit account for our clients. So essentially, it's a bank account. It's FDIC insured, fixed interest rate. Right now, it's paying net of fees 2.25%. Is that right, Drew? Is it 2.25% right now?
Yeah, 2.15 to 2.25 right now.
2.15% net of fees. So that's just a deposit account, FDIC insured. You can access the money whenever you need to. Another one gets a little bit higher yield if we want to go that route is we can simply invest in U.S. Treasuries, and short-term U.S. Treasuries, typically called T-bills. A 6-month U.S. Treasury right now, I just looked earlier today for a client, it's yielding right around 4.5%. So we could always purchase some of those within one of our TD Ameritrade accounts. If you hold those for the 6 months, you get your principal back, plus you get the interest that it pays, while you're holding it. So those are a couple. We've got even some investment or some funds, some exchange traded funds that we can look at that invest in very short-term bond portfolios. These are investments that are not going to be impacted much by rising rates because they are so short-term in nature. But again, they're yielding around 4% right now. So we do have some very low risk to essentially no market risk solutions if we want to try to guarantee some type of or lock in some type of interest rate in short to medium term.
Yeah, and I think those tools are needing to be in everyone's portfolio. It doesn't matter how much, but they are critical in a time like this where there's a lot of uncertainty. And so it's good to have the right tools. And so what we would tell you to do if you just say, hey, I got some more questions about gold and silver. Hey, I'm talking to someone to buy some gold and silver from them. Well, give us a call because we do have more information on the brokers out there. There are some shady folks in the space, I will tell you. Done a lot of work on it. So make sure you do your due diligence in that space if you are going down the gold and silver route. Or if you have questions about, hey, Andy, that money market account was interesting, or how would T-bills fit into my portfolio? Give us a call. We'd love to chat with you for 15 minutes. We're not pushy trying to sell a product. Ultimately, we want to help you achieve your financial goals and make sure that you have the right tools to do so. So we'd love to chat with you. Shoot us an email, give us a call, and we can go from there.